Hey, what's good, everybody? This your man, Prophet Zones. The Prophet's not for Professor, but for Prophets. And yeah, guys, today I just want to dollar, a little bit of, not a story time. Let's have a chat. Wait, there we go. Let's have a chat, guys. Right? And the first thing I want to talk about, is, I keep bouncing from the camera and looking at myself. This is so weird. But the first thing I want to talk about, guys, gambling, right? Gambling. Is trading gambling, guys? And if it is, right? If it is gambling, is it a perspective-based thing? Well, personally, before we get to the skill part of thing and having an edge and stuff like that, right? Is it a skill-based thing? Yes. But let's not get there. From the layman that just looks at what we do, they probably think it's gambling. And they are well within their right, very, very well within their right to think that it's gambling. Why do I say that? Because they don't know, right? They don't know. What they see is that people are buying, people are selling. People are buying, people are selling. What do you do when you gamble? Well, technically, you don't buy and sell in gambling. So it's very perspective based though, because us as traders, we do understand that the edge in gambling, it doesn't exist basically, because the house always wins. It doesn't matter. But also in trading, the broker always wins. Why? We all know the statistics within brokers, right? So it's more of a personal thing. Right? It's more of a personal thing. That's why we don't consider trading gambling, because we understand that even though the broker always wins, that doesn't mean you lose, right? Because the broker can still make its money while you make your money as you develop your edge. Develop. Yeah, you understand what I'm trying to say. Develop. Anyway, that's where we get our edge, right? Let me make an example, guys. The lottery. Did you know that the odds to actually winning all 6 numbers is 1:2 million, basically? 20 million. 1:20 million. 20, guys. Do you know how much 20 million is? We don't deal with those odds in trading, guys. We really don't deal with those odds. 20 million. 20. Guys, basically you can play the lotto your whole life and not win once. So, and lotto is a gamble. That's why it falls under, within rules and regulations, it falls under gambling. Trading doesn't fall under gambling within rules and regulations. So technically it's not. Right? So that's why I say to the layman, trading is gambling, because they don't understand the gambling laws. But when you actually go to what is gambling and the rules and regulations of gambling, trading is not, it's not there from my knowledge, guys. If I'm wrong, please correct me in the comment section. So yeah, I just wanted to touch a little bit about that. Like, because there's a lot of debates going on about whether it's gambling or not. And I think us traders should be more vocal about what trading actually is. Right? Yes, we know people are being asked what is trading on podcasts, right? And that can also be a very subjective question. It's like LO. You've seen LO, life orientation. They'll ask you something and then they say that in your own words. And then you come to find that we are all correct because we explain it in our own words. No, well, the people that are wrong are the ones that went to the dictionary and took the dictionary definition, because they say in your own words. So when they ask you what trading is in your own words, most of the time it will differ, because we all think differently, right? As I say, some traders view trading as a gamble simply because the way their edge is based. And some traders really don't view it as a gamble because they understand that they have more than 50% chances to actually be profitable in a single trade. Meaning it's the odds are higher than gambling, and it's not in gambling regulations, so it's not gambling. But yeah, guys, let's move on. Faith. I wanted to also touch about faith. Guys, in this industry, faith is actually a very big thing. Not hope. Not hope. Because you can't forward test a strategy or a model and back test and forward test it and then hope it's correct. No. That's why back testing and forward testing exist. Because you can't hope. You need to know. So in trading, it's really a knowing type of thing that we deal with. You need to know, right, instead of hope. But you need to have the faith in yourself, because there's something called losing streaks, guys. Where like in a month, right, maybe you lose like about 5 times, but some people don't, depending on your model. But there is a losing streak where you make quite a lot of losses, but then that 1 or 2 wins kind of makes back your losses and more, depending on how you trade. So you can be a full margin trader, full margin trader, and you're setup based. You're trading based on a setup, meaning you know that your setup, your A plus setup is this. Whenever it shows up, you just capitalize off of it, whether you blow that account or not. Because you know when you don't blow the account, you make a lot of money. But when you do, you lose whatever you deposited, right? So a losing streak can be overcome. Oh yeah, you get what I'm trying to say. If you have faith in what you're doing. And the last thing I wanted to touch on, prop firms, guys. Prop firms are a very beautiful model that actually helps a trader to understand the risk. But not every trader is that risk averse in the type of prop firms, right? So some traders, full margin traders and prop firms, they're usually not friends. Why? Because if you're a full margin trader, you basically look at the charts via a setup, meaning you don't mind risking 100% of your capital on that setup. But a prop firm trader is more of a 1:2, 1:3, 1:4, etc. type of trader, because they'll always risk 1% of their account, meaning they'll deposit 100,000 but always risk 1% of that 100,000, right? So prop firm trading. What I wanted to actually say on prop firm trading, guys, it's still a demo. Yes, we get payouts and everything, but understand that the goal is not to stay there. The goal is to build your personal capital that you cannot violate, or the goal is to build a track record that is long enough that you can now get investors that actually will audit your track record and actually see that no, we can actually give this person 5 million because they consistently make 2 to 3, 4% a month. By the way, guys, do you know that the top 1% of traders are people that make 2% a month consistently? It's not 18%, it's not 10%, it's 2% a month consistently. Just go research that, right? So you don't need to make a lot of percentages to actually get funding. But I'm talking real funding, not prop firm funding. I'm talking real funding, right? So yeah, I'm not saying prop firm is not real, but guys, it's a demo account. They actually do say, right? But yes, you do get a payout. So basically what I'm trying to say here is, to all prop firm traders, build capital so that you can actually have your own account that is as big as the prop firm account you're trading. That's the whole point. You know what I mean? So yeah, guys, my song is done. So I'm actually done. Oh, at 8 minutes. I'm done as well. And now we'll jump into the charts so we can analyze DXY. As you saw, guys, last week I wasn't here, but everything went well. So we're just gonna basically take everything from there. But yeah, guys, with that said, let's just jump into the charts. All right, guys, as you can see, now we on the DXY. And last week I was not here, right? I didn't drop an episode simply because I was sick. And yeah, guys, but I was active with my students, and we were actually analyzing and trading. So a quick disclaimer, guys. What I do here is basically free knowledge, right? It's free analysis, free knowledge. And I do it to the best of my capacity, but at the same time, by not giving away too much so that my clients feel robbed, right? Because my clients do actually pay their hard-earned money. So I can't just give away everything. So what I usually do, I just give like an overview, like an overall of basically what is happening, right? Or what might happen, to put it in better terms. So basically what we were saying is if the market closes below this green line, right, on the last episode, that we might look for shorts up until the next green line right here. And we did not hit stop losses, guys, by the way, because we do follow the market day by day in the mentorship program, just so that you can always be sharp, right? We do have our analysis sessions so that you can understand what I'm looking at and I can understand what my clients are looking at, and then we can actually function in sync. So yeah, the market did close below here, right? And technically we were looking for sells, right? So that was on the Tuesday, on the 24th. Now let's go to the H4. I want to show you guys something. So Tuesday on the 24th, as you can see, was not 24th, man. Not 24th. Sorry about that. It wasn't the 24th. Oh, it was the 24th. Okay, it was the 24th. Yeah, so Tuesday on the 24th, it was right here, right? As soon as the market closed below there. So basically now what we were looking at is a pullback for the market to come tap into this zone right here, to come tap into this fair value gap and 50% of it. As you can see, it's represented by this black line, right? And that went well. So we were able to actually grab some sells from this market, able to grab some sells from USD pairs all the way to this low right here. And as you can see, TP was hit. So basically the setup was something like this. And we usually aim for 1:3s or the previous structure low or high. So in this case, stop loss was just right above that zone. And as you can see, 1:3 was reached very quickly, which gave us two trading opportunities, because from there we had another trading opportunity, which was from this fair value gap and 50% of it, right? 50% of this fair value gap. And as you can see, not that one, man, this one. As you can see, the market tapped into that zone and we were able to go to our lower time frames to find a nice entry, right? To find a nice entry, because we don't just base off our entries off of this time frame right here. We base it off lower time frames. So basically on our M15, what it kind of looked like was something like this. We have a specific entry confirmation, which I can't really disclose on here, but yeah, we had a specific entry confirmation, and as you can see, it was beautiful trades to the downside. And for those that actually caught the whole move to the next low, was actually very, very, very beautiful, because the next low was here. It was probably like a 1:7 or 1:6. Yeah, 1:6.5, 1:6.3 basically. That was a beautiful, beautiful trade. But yeah, guys, basically we caught lovely sells on this pair in that week, right? So now this week, what I recognized was the price rejecting this low, right, and pushing all the way up. Now there's other things we do. That was able to kind of show us that the market is bullish for this previous week, right? This NFP week. And we're basically buying USD CAD the whole week and selling odd USD the whole week. Now, a lot might be asking, what might happen now? Now we need some form of pullback. Why? We have violated, let me delete this, we have violated this high, which, remember, we were looking at violating this high quite some time ago. We violated that high very well, and then guess what happened after that? The NFP just shot up, which was very beautiful. So now basically what we'll look for is a minor pullback.
because we still have some momentum and some room to the upside. So if I can put it properly, this zone right here, this supply zone right here is a very nice supply zone. And as you can see, there's a fair value gap above that. So at any given point, if the market like taps into those levels at like Monday or Tuesday, then we can easily get a pullback to the downside, right? A pullback to the downside, but a pullback is just that. It's basically just a pullback, right? So we can easily get a pullback to the downside and then to the upside again. But then if we do not break the high that of our pullback, then we officially know that we are ready to continue our downwards trend. But if we don't, then we'll push all the way up into this fair value gap that we have on the daily, which is close to this supply here, which has quite a lot of volume in it, right? Which has quite a lot of volume in it. So those are the points of interest that we kind of like looking at in terms of trading from, right? And as you can see, there's also a very lovely pullback right here. I mean, a fair value gap right here. Very lovely one. So with that said, the market can easily want to go tap into that fair value gap right there. So it can easily react over here a bit and then tap into this fair value gap. And then all of a sudden the bulls might just lose steam. And if we get any change of characters, of course, I'm talking about the lower time frames, then we know that we can easily trade this market back down into these lows, which is basically this demand zone that is resting right here that we just created, right? And then we'll take it from there. So basically what we're looking at is those points of interest and how the market will behave at those points of interest. As I said, on my mentorship program, we go through the markets day by day, just looking at the markets so that we can actually kind of know if a certain point of interest is strong enough to hold or not. So yeah, guys, basically with that said, this is what you kind of have to look for, because we still have quite a lot of downwards pressure. If we look at the monthly, yes, we just had an engulfing candlestick that is going to push to the upside, but at the same time, there's a lot of volume that is resting in this area. A lot of volume that is resting in this area. So the market can easily not want to respect that zone right there, right, on the monthly. So even if, let's say, we push up in the whole of this month, the market can easily want to reject that zone if it gets to there. And notice that we also have, before we get to that zone, we have a lovely fair value gap on the monthly that is resting here. And in fact, let us mark out the 50% of this fair value gap. And as you can see, we're almost there. And price tends to react from 50% of fair value gaps and order blocks, right? So the market can easily react off of that and create now a wick, because we're not done with this month. We just got started with October. So this whole thing here can end up as a large wick. This so-called engulfing candle right now, it's not an engulfing candle as yet, because we're very far from October 31st. We're very far from that, right? So the market can easily reject there and give us some form of wick to the downside, right? To show us that the sellers are strong. But yeah, guys, with that said, let's just keep an eye on the dollar index this week so that we can kind of see if it's going to respect these points of interest that we have. And if it does, then we can continue our momentum to the downside, because as you can see, the momentum is still to the downside. Boom, impulse, correction, impulse. So this could easily just be a correction, and then we carry on impulsing, right? So yeah, guys, without making this too long, make sure to sign up. Make sure to follow me on Facebook and Instagram, because I do post like recaps and stuff like that on what we do on the mentorship program. And also follow Monday Market Mapping every Monday at 7:30 for some free breakdowns that Dumela Mgomezulu and I do every week and have been doing for, the past 3-4 months. And a lot of people have found value in that. So Yeah, guys, this your man Prof Zones, and Prof is not for professor, but for profits. Clean.